So Fubo, what's going on here? Well, you got to understand, when a stock makes a 200% plus move and then makes another big upward move the very next trading day, right? It attracts a ton of short-term traders, short-term momentum type folks, right? Now, those folks usually dump out of the stock a few days after the big news came out, right? So here we are, we're about a week from the big news that came out, and the short-term traders and the most momentum folks have looked to kind of look for the exit doors, and so obviously they sold out the last couple days here, and that should not come as a surprise at all. Like usually when you see a crazy move upward, 200+%, that's just what happens. Okay, now additionally, you have new money trying to figure out, like, is Fubo an opportunity or not, right? Because you're going to get a relentless selling pressure for a couple days there where the short-term folks are going to sell out, which, by the way, that short-term massive sellout likely done at this point in time, just so folks know, okay? Most of the short-term folks have already now gotten out. This was kind of the last batch of those sorts of folks, right? So now we have new money trying to figure out, okay, is Fubo a great opportunity? Is it not, right? The stock made a monumental move, but now it's had a pullback. So now I think a lot of folks are going to kind of look at it a little more serious and say, you know what? I think this one's worth taking a dive into here, right? Now, in terms of the deal going through, I would give it about 85% chance of going through. But that's prior to today's news, so I would honestly maybe put this up to 90% now at this point in time, with maybe a 10% chance the government doesn't block it. But with this administration coming in, they should be more friendly to deal making, right? So there's only about a 15, maybe even a 10% chance that this deal doesn't go through. So a much higher probability the deal goes through than doesn't, which means the risk-reward profile is, I would say at this point in time, especially now, $3-4 stock, let's call it's much more toward the reward side than the risk side now at this point in time, okay? Now, remember, if the 85% or 90% chance that it goes through happens, this is an opportunity for Fubo with Hulu Plus Live TV to grow into a 10, 20, or $30 billion market cap, right, over this next 5 to 10 years. Now, if the 15% or 10% chance that it doesn't go through, remember, Fubo still gets a $130 million payment made out to them, right? And I wouldn't be surprised if Disney then tried to just pursue buying the whole company or something like that at that point in time, right? But once again, this is lower probability this is going to happen. Now, additionally, Venue's dead. They officially killed it a few days ago. This was around 3 or 4 days ago. News came out that Venue Sports is shutting down for good, right? That was the whole thing that Fubo wanted to block, and now it's official, like Venue's done. So if there's any still worries around Venue or whatever, like it's over. Like it's over now at this point in time, right? Additionally, one of the main companies that brought up the complaint to try to block the new Fubo deal with Disney, right, was DirecTV. But here we go. DirecTV just basically threw in their cards in regards to that situation, because DirecTV just launched a skinny bundle, folks. Yes, they did. They just launched a skinny bundle. It is official. On Tuesday morning, DirecTV announced they're launching MySports, an industry-first, sports-centric package with access to 40 sports and broadcast channels. The package will be available immediately in 24 metropolitan areas, including New York, Los Angeles, Chicago, Philly, San Francisco, so a lot of the big markets, right? And will expand into more markets over time. Initially, MySports will include national channels such as ACC Network, Big Ten, ESPN, all the big dogs, right? TNT, TBS, SEC Network. And additionally, they're supposed to launch with ESPN Plus as well here in the future. So the pricing, they're talking about $50 for the first 3 months and then go up from there, right? Now, this is huge good news in my opinion for Fubo. Some people might take this as a negative because they're going to say, oh, DirecTV's beating Fubo to the punch. No. First off, this is not even the good time of year to launch something like this. Football season's basically over, right? We got playoffs going on. We got a few weeks left here in the NFL season. We got literally one college football game. The time you want to launch a sports-related package, there's really 2 times in North America you want to launch a sports-related package like this. One is around the time NBA playoffs start, right? Because those are on a ton of different channels, and a lot of people like to watch NBA playoffs, and they got to figure out, like, am I going to sign up for a package or whatever? The other is right before football season starts. So think like August, right? Before college football season starts, before NFL season starts, a lot of people look around, I want to sign up for some sort of sports package here. That's the time to launch this. So my opinion is DirecTV is launching this as the worst possible time. Like, yeah, they're getting the the first mover, like, hey, they're the first ones to officially launch this, right? But at the same time, like, I just don't know how many people are even paying attention to this right now. Like, everybody that really wants a sports package already has signed up for some sort of, sports package, either through DirecTV or through Fubo or through YouTube TV, somebody like that now at this point in time. So that's the first thing to kind of factor in. Second thing is, now this makes it where I don't think DirecTV has any say in trying to block this deal with Disney and Fubo now at this point in time. No say at all, because now they're already launching their own skinny bundle with obviously approval of ESPN and talking about ESPN Plus even being part of that. So at the end of the day, like, I would say now this is like a 90% probability this deal is going to go through. 10% probability the government blocks it, but I don't think there's a super high probability of that now at this point in time, right? So, especially with Linda Khan, I believe she's out now at this point in time. So, I mean, I'll say this is looking really freaking good. This is looking really, really, really good in regards to Fubo. So, here's the deal. If this deal goes through in the next 3 to 5 months for Fubo, I think Fubo is going to be a $10 plus stock by the end of this year. By the end of this year, yes, $10 plus. That's assuming the deal goes through in the next 3 to 5 months, which, with the new administration coming in, and I don't think they're going to try to block this. That's my opinion on it. All things are possible. So Fubo's looking good here. Cheesecake Factory, extremely bullish activity in regards to this one, right? Now we're up $30,000 on this stock. It's up another 2.5% plus here today. This is extremely bullish activity if you're a long-term investor in Cheesecake Factory. I mean, extremely bullish activity, okay? So, I don't know if you guys saw that. Well, you probably didn't see this unless you're in my private stock group. I posted this inside Breadcrumbs yesterday. I said, chart of the day. Russell's now in correction, over 10% down. Other major indexes are in pullback, right? Because I was showing here that the Russell's down over 10%. This is since Christmas Eve. Dow Jones was down about 6%. S&P 500 down about 4.5%. And the Q's down about 3.5% roughly, right? Now, that's important because you got to understand, if the Russell is showing real weakness, what is the Russell? The Russell's small cap stocks. Cheesecake Factory is a $2-something billion market cap company. It's a small cap stock, right? It gets put in that same category as all those stocks. So when you see a stock like Cake, a small cap, performing so well, even with the Russell being very, very weak, that's very bullish. But that's just a start. This next thing, much more bullish. I mean, this is where I say it's extreme bullishness. Check this out. What I'm showing you right now is from the time the Fed announced they're going to cut rates, okay? I'm showing you that was September 18th. And I'm showing you Cake stock since that time period. Cake stock has gone up 30% since the Fed announced they're going to start cutting rates. Now, the 10-year Treasury has moved up almost as much, 29.9% over that time. Now, if you look at arguably the most popular dividend ETF in the world, it's SCHD, right? It's Schwab's dividend ETF there. Over that time, the dividend ETF has gone down, not up, down 2%. Meanwhile, Cake stock has gone up 30%. We have a monumental divergence between what is going on with Cake, which is a high yield dividend paying stock, right, versus a dividend ETF that's extremely popular. So and the reason, by the way, dividend stocks have so much trouble when treasuries are going up so much is because basically investors will say, why am I going to go buy dividend yield stocks when I could just go ahead and put my money over here in treasuries and earn 4+%? And specifically when treasuries start going over 4%, that's when dividend stocks have a lot of trouble. If treasuries are in 3% range, that's fine. 2% range and dividend stocks are the play, right? If treasuries go over 4%, and the more they go over 4%, the more dividend stocks have trouble, right? Because people say, I'm not going to risk my money over here in some dividend stocks when I have treasuries giving me 4% plus guaranteed from the U.S. government, right? It's understandable. And so the fact that Cake is performing so well despite the 10-year making that insane move, this is phenomenal. And so I'll put it to you like this, right? Great stocks are like a Usain Bolt, okay? They run their own race. They're not even worried about everybody else is fighting for second place. Everybody else is fighting for whatever. I'm running my own race. I'm doing my own thing. And whatever everybody else has got going on, y'all can do that thing over there, okay? But I'm running my own race here. And that's what great stocks do. And so it's clear as day, Cheesecake is emerging as a truly great stock that has such a compelling story to it, right? For investors about where Cheesecake's going over this next 5-10 years, and people are really starting to understand, like, oh, this flower child concept that's going to be huge, and North Italia it's going to be huge, and then they got these other concepts coming behind that are very successful. People are starting to understand the story is a very special story. This is not just another dividend stock. If it was just another dividend stock, this would be down with SCHD down here, down like 2%, or down 5%, or down 10%, not up 30% since the Fed announced rate cuts. So Cheesecake's running its own race, man, and it's phenomenal to see. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Cheesecake Factory. Yes, this one has decades of growth ahead. Now, when it comes to Cheesecake Factory, there's 2 individuals you got to understand that are very important in this story. One is this gentleman I'm showing you right now, David Overton. He's led the company since 1992, and he was, the founder of basically the company before, okay? And he's done a phenomenal job. I mean, he built one of the most famous restaurant chains in the history of mankind in the Cheesecake Factory. Like, it's incredible. Like, what a success. What a success, right? But there's another key individual in this story that I think is going to end up being so impactful, even though he doesn't technically work for the company. But it's this man right here. Sam Fox is a founder and CEO of Fox Restaurant Concepts, is a 3rd-generation restaurateur, and he has opened many restaurants across the United States. Fox grew up in Tucson, Arizona, where he helped his parents' restaurants. He dropped out of college before his junior year. He opened up his first restaurant at the age of 21. A 10-time James Beard Award semifinalist for Restaurateur of the Year, named one of the 50 most influential people in the restaurant industry by Nation's Restaurant News for 5 years in a row. And he's also a New York Times best-selling cookbook author. Incredible man. And the reason I show you that there is he founded a company named Fox Restaurant Concepts, okay? And basically, news came out summer of 2019, July 31st, 2019, that Cheesecake Factory was going to acquire Fox Restaurant Concepts. Fox Restaurant Concepts owned North Italia, they owned, Flower Child, and a lot of other concepts, okay? Now, all these concepts were extremely highly rated, very busy locations, very, good margins with them, and were loved by their consumers. And that deal ended up actually going through and was approved, and it went through on October 2nd, 2019. And then what happened shortly after that, a few months later, the worldwide economy closes down. Boom, Rona hits. And who even cares about a restaurant company or a restaurant stock when the worldwide economy is closed down and restaurants are closed down, right? And so Cheesecake Factory goes through this kind of time period where no one pays attention to it. No one cares about it. And the reason being is people looked at it and they're like, the world's closed. Like, do we want to own a restaurant? No, we don't want to own any restaurant stock. And then what happened? We got hit with the highest inflation the restaurant sector has seen in decades and decades and decades. So you have 2022 come along. No one wants to touch anything restaurant stock related, right? Meanwhile, Cheesecake Factory is opening more of these North Italia locations, more of these Flower Child locations, and seeing incredible comps from them. And the more this time ticks on, the more it starts to become obvious that North Italia and Flower Child concepts, 2 restaurant concepts, one in the Italian space and one more in the healthy food space, kind of like a Chipotle Cava type competitor almost, right? It becomes very obvious by now. These 2 concepts are going to go across the entire United States of America and maybe even international long term. But they're going to go to every major city with likely multiple locations in every major city across the United States of America over the next few years. And that has now become obvious, right? And so now these two concepts, they're the only company you're going to be able to find out there that has two concepts that are so successful that they're going to be able to build hundreds of these locations over the next number of years across North America. It's incredible. Meanwhile, they have their obviously insanely famous ATM machine, which is a Cheesecake Factory. And then the best part is we're not even done. Even when North Italia and Flower Child, even if, let's say, 10 years in the future and they build a North Italia and a Flower Child, everywhere you think they could build one. It's like there's no more opportunity. They have so many concepts coming behind that, like Blanco, which is a Mexican concept, like Culinary Dropout, that are in testing phase right now. When I say testing phase, I don't mean like, well, they're trying to see if they can make money off this. No, they're testing it in more and more markets across the United States to see if they should take this completely national. Now, when it comes to Cheesecake Factory, they're going to become a big dog. There's no doubt in my mind, right? And when we talk about big dogs in the restaurant space, we're talking about companies that, are tens of billions of dollars of market cap. Cheesecake Factory today is a little over a $2 billion market cap. Cake will become a big dog. Flower Child and North Italia alone will get them to become a big dog. Then you add Cheesecake Factory concept on that, and then likely concepts coming behind those. It's an incredible. And remember, the more money this company starts making, what are they going to be able to do? Massive share buybacks if they want, increase the dividend if they want, build more locations if they want, start new concepts. They've got it, man. The next 10, 20 years, they got it. They are, in my opinion, they're the most exciting restaurant-related concept by a mile for the next 10, 20 years. And it's not even close. And I looked at every one of these stocks. I look at Chipotle, I look at Cava, I look at Texas Roadhouse, I look at them all. And there's nothing I found that's remotely even close to as exciting of an opportunity as Cheesecake Factory is over this next number of years. And so what I'm doing right now is I'm buying every share in sight. And I'm even averaging up on shares, which is, pretty rare for me to say, you know what, I'm already up on the stock, I'm already making good money, I'm going to buy more shares. Because that's how much I believe in this one over this next 10 plus years, decades of growth ahead for Cheesecake Factory, okay? Listen, take action. Take action. Take investing serious. Remember that first 10 minutes of this video, because I can tell you all this isn't possible without taking action and taking investing serious. I started doing that 15 plus years ago, and obviously it's changed my life. And so make sure you take action. Make sure you start taking this stuff serious. Don't just gamble your money out there. Make sure you know what you're doing, okay? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area. Sofi Technologies. We want to talk about a company with decades of growth ahead. Sofi Technologies is that company. Now, when it comes to Sofi, they're led by this man, Anthony Noto. He's led this company for well over 5 years now at this point in time. Anthony Noto, he used to be a managing director at Goldman Sachs, important position at Goldman Sachs. He was a CFO of the National Football League. He was a CEO of Twitter, and he used to be the head of Twitter Ventures, okay? So a man has a massive amount of extremely valuable experience prior to joining Sofi as a CEO. Incredible resume that this man has. Now, when it comes to Sofi, you got to understand there's two main, I would say, businesses that you have to consider for Sofi. First is there's their banking side of the business, which sometimes they'll take the banking risk. Sometimes they'll kind of be like an affiliate, kind of a middleman between, them and somebody that actually takes the loan risk there. But when it comes to SoFi, we're talking personal loans, we're talking banking, get up to $300 with direct deposit, which is genius, by the way, because you can attract so many young people with doing that, and then they end up banking with SoFi for decades to go. How do I know that? The guy you're looking at right in front of you, when I set up my first bank account, it was like 2008. And Chase, JP Morgan Chase, they had some sort of thing where essentially you got $250 free if you set up direct deposit with them. Guess what I did? Set up direct deposit with them. And I still love Chase to this day, right? It's genius, absolutely genius that they do this. Credit scores and insights, mortgage loans, invest through SoFi, student loan refinancing, private student loans, credit cards, right? They're a one-stop shop for everything banking related, digital focused, not branch focused like traditional Wells Fargo, JP Morgan, Bank of America, those guys, okay? Now, additionally, they have their tech side of the business, which is Galileo, right? And Galileo works with a ton of innovative companies. Dave, they work with Toast, they work with H&R Block, they obviously, SoFi, right? And when it comes to Galileo side of their business, this is really for entrepreneurs that are trying to build finance-related products, right? Or it can be for even like bigger financial institutions to use Galileo to help kind of with the digital transformation of their business as well, right? Now, banking, they help with that. B2B payments, cryptocurrency, embedded finance, investing, all back-end stuff for finance-related apps, banks, things like that, okay? Now, when it comes to SoFi, looking at 1000xstocks.com here, how beautiful is this chart on a trailing 12-month basis of revenue over time, right? It's gorgeous. This is what's projected to happen. This is what has happened for SoFi. It's absolutely beautiful. Company just has growth on growth on growth, and I don't really see that stopping for decades to go in the future, right? Now, additionally, the flip has happened already with SoFi. What is the flip? The flip is when you go from losing a ton of money, year in and year out, quarter in, quarter out, to start becoming a money maker on the bottom line, right? And so you're not just bringing in revenue for revenue's sake, but you're actually starting to make money on the bottom line. It's happened. It's over. The flip has happened. So now the question for SoFi, there used to be talk around SoFi about when will SoFi get profitable? That's no longer a discussion. Now what we're discussing in regards to SoFi is how profitable is SoFi going to get and how quickly. And I can tell you that's a very, very different discussion than when are they going to make money. Because a lot of people don't want to own a bank, if you want to call SoFi a bank, which they're a lot more than a bank, but they don't want to own a bank that doesn't make money. That's no longer an issue. So SoFi now sets up tremendous for the long term here. Now, this brings me to Netflix, because SoFi reminds me a lot of Netflix, right? When you think about Netflix, which now is a $366 billion company, what did Netflix do that was so incredible, right? Well, Netflix really focused on being digital first. By being digital first, right, they were able to, remember Netflix way back in the day was a mail-in service, right, which undercut even like Blockbuster, Hollywood Video, Redbox, things like that, right? And then they focused to digital from there. And if you think about SoFi, what are they? They're digital first. They're all about the app, the website. Digital first. Go find a SoFi branch somewhere. Good luck, okay? Doesn't exist. That's not what they do. Whereas Wells Fargo, Bank of America, JP Morgan, all these guys, they got these massive amount of locations, right? These incredible, massive workforces behind those companies. And that reminds you a lot of what Blockbuster Video had, Hollywood Video had, Redbox, right? Redbox had all those boxes that seemed like they're in front of every dang Walgreens and CVS and Walmart out there, right? Blockbuster, Hollywood Video, stores all over the place, and obviously we know those don't exist today, right? And then what Netflix did is they went to more original content over time. Well, with SoFi, they like to play a lot of the middleman, right? Where they don't take the loan risk in the end on many various products. I think longer term, and we're really talking 2030 and beyond, I wouldn't be surprised if SoFi wants to take loan risk as well. And the reason being is you make more money doing it that way, right? So SoFi for this next maybe 5 years is going to be much more focused on trying to be less CapEx, more margin heavy. But I wouldn't be surprised if longer term, to give the company even a bigger moat, if they end up taking more loan risk, I'm talking 5-10 years from now, right? And then we start talking about a SoFi that builds into a multi-$100 billion market cap, not a company that's in the $10 to $20 billion market cap like it is today, okay? We start talking about SoFi becoming a banking giant, a finance giant, not a little guy. Now, additionally, when it comes to SoFi, I think this is one of those stocks, like, I'm already up 132% on the stock. I own 3,700 shares in the public account. I own some shares in other portfolios, but I think this is a stock I'm going to look back on and be like, why didn't I invest more? And that happens sometimes. And I think SoFi is going to end up being one of those stocks in the end that I look back and I'm like, why didn't I invest more in that company? And you know what stock it reminds me a lot of? It reminds me a lot of Palantir. So much. And Palantir is an incredible stock that I'm up 855% on. But SoFi reminds me a lot of Palantir. No, obviously completely different business models and sectors and industries, right? But in terms of shareholder base, like a very core loyal shareholder base at SoFi, same exact thing with Palantir, where people are very tied in with everything the company's up to, what they're doing there, and just being very future looking. Rather than looking in the rearview mirror, they're really focused on the future. So there's a lot of like similarities I see in SoFi that reminds me a lot of when I was investing in Palantir, okay? Alrighty, guys, and obviously I'm still invested in Palantir. It's just I'm not actively buying the stock anymore. I'm just a holder of Palantir now.